So we're here today with Margaret Tozier, who is a mortgage loan officer with CCF Bank here in the Twin Cities and then also in Ellsworth, Wisconsin. Margaret, thanks for coming on the show today.
Well, thank you for inviting me. I appreciate it.
So we spoke recently about some new options in mortgage financing for people that are interested in buying a home. And maybe first of all, just kind of walk us through the most common mortgage financing that people use, conventional VA, things like that. And then we'll kind of delve into the other options that people have available that I didn't even know about here before a couple weeks ago.
Well, absolutely. I think most commonly folks are using your conventional mortgages, meaning they're insured by Fannie Mae and Freddie Mac, typically thinking 5 to 20% down or so to purchase a home. Also, getting a little more common are some other programs out there. There's lower down payment programs like FHA, Usda, and some other 3% down programs as well. There's lots of options, which is really nice to have, especially I think during this time of COVID. Finances are a little tighter for folks and they're really looking for other options that they could explore to purchase their first home or even a subsequent house.
Sure. And then also veterans with the VA, that's 0% down, correct?
Correct. There's actually 2 different 0% down programs. The VA program is fantastic, 0% down for veterans. You also do not have to pay any mortgage insurance, which is a really nice benefit with that program as well. Another 0% down program is the USDA product. That's also insured by the federal government. That is available in certain locations. The rural development products, so more outside of the metro area is where that program is available to. And it is dependent on the income of the whole household. So you can't be over a certain income level, depending on the area, whatever's typical. So those are some really nice 0% down programs.
Okay. So most commonly, would you say it's conventional loan that people apply for?
Correct. Most common purchases, I would say, are 5 to 10% down for a primary resident that folks are doing right now.
Okay. Can you walk people through, I know a lot of folks know this, but for people that are maybe unfamiliar with the process, the 20% down seems to be kind of that magic number as far as avoiding certain fees.
Sure.
Just explain that to people, why
Absolutely.
A 20% down is preferable sometimes.
Sure. So at one point in time, people needed 20% down to purchase a home for banks to feel safe with that because they've got some skin in the game here. And I believe it was the 80s or so where something called mortgage insurance, private mortgage insurance became available, where the lenders would be willing to accept less than 20% down as long as the buyer then pays for this insurance for the mortgage, again, to kind of get some protection there. And so the most common way to do that is to have part of your monthly payment be this PMI if you're going to put less than 20% down. And that does eventually go away after having it for a certain period of time and a couple other little rules there to have it drop off. But it does eventually go away. The more you put down, the less expensive that premium is. I often explain it to my customers. It's kind of like car insurance, where the amount of the premium depends on the risk of the driver with car insurance. It's the same with the mortgage insurance. It's dependent on the level of risk of how much that premium would be for you. Something I would like to put out there, a lot of folks don't realize there are a couple different options to pay that insurance, or actually 3. One is the typical monthly paid. Some lenders also offer what's called lender paid mortgage insurance, where the lender basically pays the premium, but they bump up the interest rate to cover that, which works out, depending on how the math works, that could be an option. But one that a lot of folks don't know, and a lot of my customers have taken advantage of, it's called the single premium. In other words, the customer would pay the policy or the premium as a one-time cost or fee at closing, and they don't have it as part of their monthly mortgage payment.
Okay.
So oftentimes, and I run a calculation for my customers, if you're going to keep the mortgage for more than 4 to 5 years, that can be a cost-effective way to pay that insurance and put less than 20% down. And I even have a chart I can share too with folks that shows, if you put 10% down and just pay that one-time premium at closing, If it's a $300,000 purchase price, that's 30 grand left back in your pocket to go pay for the new furniture and all the updates that you want to do to the home, and can be a really cost-effective option for you to keep some money in your pocket and avoid monthly mortgage insurance.
Okay. That's great. That's, I think, something that a lot of people don't know about. And that can be very advantageous, I would assume, to people who want that option. And like you said, they want to make other upgrades to their home or new furniture or things like that, or just over time not have that additional part of the payment.
Correct.
That they have to make.
Correct.
Great.
Yeah. I think liquidity is becoming a lot more important to folks. We kind of learned because of COVID, things can happen unexpectedly. And they would like to keep that cash in the bank for the what ifs that can pop up. And so that's single paid premium is really a nice option to keep that liquidity, to keep that money in the bank, so you can use it for other expected things that you want to do on your new home or for the unexpected.
Sure. Overall, has it been a busy year, 2020 and into 2021, with low interest rates, just in general, a pretty good year?
Yes, all records have been smashed. We had, as our bank, already had done as much volume by August that we did all of the previous year. A lot of it was with refinancing, but the purchase market as well, it was pretty good because the rates were so low. So people who were just kind of maybe on the fence of, do I want to purchase now or wait? Thought this is a good time. I want to purchase a home while the rates are so low.
Yeah. That's what I'm hearing from my clients as well, and encouraging people, if they do want to make that move, either purchase, whether it's new construction or existing, or definitely sell their current home. Now is an excellent time to do that.
It is.
So those are the more, I guess, quote, conventional ways of financing a home, or the more common ways of financing a home. But we want to talk to you today a little bit about some other options that people might have that may not be as well known as the ones that we just spoke about. So maybe introduce us to those. And we also do have some other options in particular for Wisconsin residents, but let's talk about some of the other options first, and we'll get into Wisconsin.
Absolutely. A really cool, well, there's a couple of 3% down programs. Fannie Mae, their product is called Home Ready. It's 3% down. It's a conventional loan. Freddie Mac's version is called Home Possible.
Okay.
They are conventional, 3% down, so less down than having to go with an FHA loan, and a lot less fees, which is the really nice benefit there. You do not have to be a first-time home buyer to take advantage of those programs. It is for a primary residence only.
Okay.
It's available in any part of the country. It is for low to moderate income, so there are certain income caps. As long as the applicant's qualifying income is below those caps, you're good to go with that. What I think is a fantastic feature of the 3% down programs is that if the customer's credit scores are 680 or higher, a lot of the typical, what we call adjusters or hit, to the interest rate, can actually be waived if you've got strong credit with those products. I sometimes share, I had a customer, sweet gal, purchasing her first home, what she thought was a townhome. And it turned out to be a condo.
Okay.
And there actually is a pretty significant adjuster to the interest rate if the property is a condo. It's 3/4 of a point, which is pretty significant. And she had already locked her rate thinking it was just a regular townhome. What this meant is she would have to come up with another $1,500 to cover that adjuster that she never expected.
Yeah.
And she just, funds are limited. It's her first home. Thankfully, she was doing that 3% down program. Her credit scores were over 680, and that 3/4 point was waived.
Nice.
Which was a huge relief to her and to her realtor, because they didn't have to think about scrambling of what are we going to do now. They had peace of mind. So that's something that's huge. They will actually go up to 1.5 points of adjusters they will waive if the credit score is over 680. So potentially someone doing 3% down can get a better interest rate than someone doing 5% down with this particular program, both as a conventional loan.
That's
huge.
Great.
It is. The PMI premium can even be less expensive, and just like doing 5% down, it can be eventually it would be canceled out.
Just to confirm, that's Home Ready and Home Possible programs. So
Yep.
speak to someone like you for more information on either of those programs and how those could benefit the buyer, correct?
Absolutely. Absolutely. I can share with them the link to the website where they can learn really nice information on it, prepare to purchase a home. With those programs, you do take a home buying class. It's super simple, right online. All of my customers who have used the program said it was super simple, and they really appreciated the information to prepare them for home ownership.
Mm-hmm.
So really nice and easy.
I really think, some buyers are more ready to launch into a buying process and to get out there and look for homes and apply for loans and things like that. But I really think even the more educated or more experienced home buyers should at least have some sort of overview of how things have maybe changed since the last time they bought a house. Maybe it's been 20 years. And some of the options that you're talking about, they may not have any clue that those are
Right.
available, or that the market has changed. Maybe they bought a house when it was 19% interest rates. Boy, times have changed. So that's an excellent idea to have that class, or at least something online that would be available for people to look at.
Yeah, and even like our website has calculators where you can play with different options. If I put this much down, what would my payment be? How about if I overpay every month? How much sooner can I pay my mortgage off and save money in the long run? Those are good things. The mortgage industry is ever changing. That is for sure. I remember being excited when rates got down to 7%. I couldn't believe it.
Yeah.
So there's a lot of changes. COVID changed some guidelines as well. So especially if you're self-employed, there's been some huge changes there, which I'm happy to walk any self-employed customer through what to expect as a self-employed person if you want to look at purchasing a home right now.
What did COVID do as a sidebar? What did COVID do to change the ball game a little bit?
Well, they want a little more assurance that the income is going to be consistent and stable and last for at least 3 years. As you know, and it's just so sad what COVID did to a lot of the self-employed folks who owned a business, that were hit hard during COVID through no fault of the customer. But as an investor, Fannie Mae and Freddie Mac say, we have to know we're going to be good if we take this loan on. And so they just want assurance, documentation typically right before closing to make sure the customer is still employed, earning the same income that we initially qualified them with. Self-employed folks, they want to actually look at a profit and loss statement from the most recent year that has not been filed yet, just to see if there's a difference between the most recent tax year that you filed compared to that next year. Is your income still okay? Is your company still going to be okay? And because it's not to make life hard, but we want to make sure we're not setting our customers up to be in a financial situation they're not ready for either.
Yeah.
So it's just a little more paperwork and some more insurance, that all is well.
That makes sense. Definitely. Yeah. If you're going to be loaning someone $300,000, you want to make sure they're able to pay it back.
Exactly. And it's really a justice to the customer as well. We want to make sure there's nothing that could be difficult for them too. I mean, this is their house. We want to make sure they can breathe easy after closing.
Right. Okay. So there's some other programs that are out there too. Let's talk about those.
Mm-hmm. Absolutely. So we talked about VA and USDA, some great 0% down. FHA is a 3.5% down product. Where I see FHA being a nice benefit is customers say that had a bankruptcy less than 4 years ago, because that actually would make them not eligible for conventional financing. But FHA is more flexible with that. FHA is a little more flexible as well with what we call debt to income ratios, which is basically a measurement of how much your monthly debt is compared to your qualifying income. FHA is a little more flexible with that. So that's a nice program as well. There's something called jumbo loans or non-conforming loan amounts. Every year, Fannie Mae and Freddie Mac change what it is. Now it's $548,250. So that's if you want to do a conventional loan, that's the maximum your loan amount can be.
Okay.
Anything above and beyond, that's what's called a jumbo or non-conforming loan. And we also offer those products on a fixed rate, fixed 30-year or 15-year. So that's another product available. Sometimes it's hard to find a lender that has a fixed rate if they want those higher loan amounts. New construction is getting more popular. So if there's a few options, if you want to have a home built, you can see if the builder can finance the project and you just need a regular mortgage to pay them or buy the home from them when it's done. Probably the easiest option for the customer. There's another option where you can get a construction loan to finance purchase of land, the cost to build, and then just get a regular mortgage once it's done. That's another nice or getting more popular option right now too.
Sure. Okay. Is that traditionally what people do? Is they basically the construction company is the owner of the home that they purchase it from? As maybe walk us through how that works traditionally if you're buying a brand new house that's being constructed.
Yeah. If you can buy it from the builder, it is the easiest option because you're just doing one loan, just like a regular purchase in essence. But for the builders, sometimes they don't have the liquidity or the assets or whatnot, or if the customer already owns the land, the builder's not going to finance that. And so like we have a one-time close where we close on the construction loan to pay off any liens on the land or purchase the land. And then we hold the funds for the construction loan, picture it like an escrow account, if you will, where the builder will do some work, request payment for the work, and there'll be an inspection and yep, you did check, don't this, and this. And we will send you the monies based on your line item cost breakdown for that work you completed that comes out of that escrow account.
Okay.
Or that construction loan. And the borrower just makes interest only payments only on what's been drawn. So it's maybe like a line of credit is a way to think of it. Yeah. And then once the home is all done, we just go and we just close it and we just do a regular 30-year mortgage or whatever you want, which will pay off that short-term construction loan once the home is done.
Okay. Okay. Great. Okay.
Yeah.
And new construction's been a little bit more challenging this year with COVID and with some delays and some supply chain issues and things like that. But sure seems like there's a lot of new homes going up here in the Twin Cities area.
Yeah. One thing I really recommend if you are looking that direction, what we have seen with COVID is the cost of materials went up tremendously, over 30%.
Wow.
Yeah, so that's something, just make sure when you talk with your builder that you really want to make sure you're covered as far as those numbers that we're putting on the line item cost breakdown and thus in the loan to have that covered. We just don't want to think your project was going to cost $200,000 and what do you know, cost of everything went up and now you need $230,000 or whatever it is. But we just, you got to make sure that you take into account the cost can actually go up, and we've been seeing them go up.
We talked about the new construction out there, but folks have second homes, or they have cabins, or they have other options. What about the down payments for those, Margaret?
Absolutely. So a second home or that cabin you really would love is 10% down. As long as we can get that private mortgage insurance on their approved, because again, we're doing less than 20% down. There's that PMI. If you want to avoid the PMI, just do 20% down. But it's nice knowing you only need 10% for that second home. If you want to do an investment property, it's a single family home, we can do 20% down on those. If you want to do a 2 to 4 unit, then the down payment would go up. I think it's like 25% down on those. Okay.
So those are the main ones here for everyone. But we talked about Wisconsin also, and I wanted to make sure that we have a Wisconsin audience out there. So for Wisconsin residents that or people that are looking to purchase in Wisconsin, what are some options there that maybe the Minnesotans don't have?
Well, the one that comes to my mind is called WHEDA, WHEDA. It's like a down payment assistance program, if you will, where it's a loan that you're taking for your down payment is what that is. So you're going to be making 2 payments every month, one for your WHEDA loan and then one for your regular mortgage. So, that's a little more process to that,
Mm-hmm.
I guess. So that's where you definitely want to talk with your home mortgage consultant or mortgage loan officer and talk about the details of that. But that is a program specific to Wisconsin.
Why is that something that Wisconsin came up with?
Well, I think just to help people come up with money for down payment, to help people be able to get a home for, home ownership. Minnesota has other programs to help with the same thing with under a different name.
Okay.
So yeah, just to kind of help home ownership, trying to get
Sure.
that economy nice and strong.
Exactly. That's great. Anything that we didn't talk about, Margaret, that you wanted to make sure people know about out there that would be of interest?
Well, I would say have a really good relationship with your lender as well as your realtor. It definitely is a competitive market out there. It's a seller's market right now, for sure. And so you want to make sure that you have a good relationship with your realtor, so they can really be a really nice negotiator for you when it comes to making an offer. I know something I do for my customers when I pre-qualify them, I do, we pull credit even for a simple pre-qualification, but I'll also ask them to send me documents like your credit documents. Let me review your pay stubs, W-2s, tax returns, bank statements. And I would hope any lender you work with does that, because that really helps you have confidence and peace of mind when you get your pre-qualification letter. You won't have any surprises. I can honestly say over half of my customers that apply online, the income documentation needs updated at least 50% of the time. What we can document is different than what they put on there. Okay. And you don't want to find that out after you signed a purchase agreement. So I recommend send your documentation upfront to your loan officer or mortgage loan officer so they can look at it kind of through the eyes of an underwriter and make sure this is exactly what an underwriter should view, so that you don't have any surprises. Your realtor can make an offer with confidence, and even note on your letter that all of this was reviewed by your mortgage loan officer. That will give you a stronger offer. It's definitely a competitive market and hard for buyers right now to get an accepted offer. Right. You want to get any advantages you can. And if your letter specifically says that your mortgage loan officer reviewed your credit report, they reviewed your income documents, they reviewed your bank statements, we check for large deposits. Can we use all of that money? Can we not? We've already checked all those bases. That will give you an advantage when making an offer. Perfect. Yes, and I do definitely encourage folks that I'm taking out to look for homes as buyers, that they already have that in their hip pocket, that they already have a pre-approval kind of a range of what they can afford. I think some folks in the past have said, well, yeah, we can afford up to 400,000. But then when push comes to shove, they sit in front of a lender, maybe it's only 300,000 or 350, based on other factors that they may not have even considered prior to that. But in the age of multiple offers and in extremely low inventory, if you're going to be making an offer before you even consider really looking at a home, make sure you meet with your lender. Make sure you talk to someone like Margaret to get your approval prior to looking at homes. Because the worst thing would be you find the home of your dreams and there's multiple offers and you don't have that pre-approval letter from your lender yet. And it's Sunday at 8:00 at night. And we don't want to call Margaret at Sunday at 8:00 at night on a Sunday to get a letter. Lenders will do it oftentimes, but we want to keep them on our good side as well, right, Margaret? You want a team, a good relationship for sure. And talk with a lender about your lifestyle, your goals. What are, not just how much do you want to qualify for, what are you comfortable with? Yeah. Often it's interesting. I qualify folks, they can probably afford more house, but they go into breathing spasms when I tell them what the payment would be. And they say, I don't want that. Here's where I'm comfortable. And really, that's what we should do. If you don't have a car right now, are you planning on getting one in the next year or two? Should we factor that in? I can qualify you because I don't have that payment yet. But if that's not going to make you comfortable, knowing that extra debt's coming up, let's work our numbers to make sure you are comfortable with that. I also like, especially first-time home buyers who don't know what they can afford, maybe living with mom and dad without paying rent right now. Something I recommend is, what kind of house payment are you looking for? Something I recommend, start putting that much away every single month. See if you really are comfortable doing that every month. If it's making it a challenge or causing some stress, well, now you know, maybe you got to scale back on what you thought you could comfortably afford.
Right.
And the added benefit is you're also saving money, so that when you're ready to go shopping, you've got money tucked away in the bank. That's what an underwriter sees, is we're living with mom and dad without paying anything or low rent, which has allowed you to put money away to buy a house. Mm-hmm. That is a really wise, and that's a customer thinking of, how do I prepare for home ownership? And just to throw out there too, like the 0% down programs, technically you don't need money to purchase a home, especially if the seller's helping with closing costs. But I have to say, you do need money to own a home.
Yes.
When your furnace goes out, it just happened to my mom and my sister yesterday. Their furnace went out. They have to come up with $4,500 because it's February and you need heat. So you have to have money to own a home. And so that's why I really recommend, get in a habit of sticking money away every month to know you're comfortable. You have money tucked away for the what ifs. Mm-hmm. And you can now enjoy your home with some peace of mind.
And same if you own a car or any other major thing like that, that now you don't have a payment. If you've been paying $500 a month for your cars or whatever it is, always a good practice to put that money away anyway. So then when you go to buy a new vehicle after a couple of years, then you have some money down payments and you have a lower monthly payment and all of that. So it makes a lot of sense. In theory, at least, it's a good, and then also just, if you are looking to buy a home, if you're going through the loan approval process, don't quit your job.
Correct.
And don't go and make a major purchase such as a car. Correct.
Yes, I actually send my customers with their welcome email a document that talks about what not to do, because I've literally had customers do every one of them. I've twice had folks quit their job during the application process, not knowing. We do check right before closing to make sure you're still employed. We also do what's called a soft pull on your credit, just to make sure you didn't take out any new debt, because if you did, we now have to go back and requalify you. So don't do that. Also, some folks think maybe closing a credit card will help things. That can actually hurt the credit score. Yes. If you're closing credit cards. Don't do that. If you have a credit card company that's giving a good report, if you will, on your credit history, you want to keep that open to keep, so that's being referenced there. So don't do that either. You want to, don't make huge changes. Don't pass around a whole bunch of money from one account to another, because we are required by the federal government to do a paper trail on these large deposits. We have to source where you got the money.
And same goes for getting a gift from a relative or from a friend or something like that. If you get $10,000 from grandma, you need to report that, and that figures in to the whole loan process. It's not just like free money.
Correct. It's a gift, and we'll get a gift letter from whoever the donor was. Yeah. Yep. And that leads to why it's good for us ahead of time to look over bank statements. I've had customers send me bank statements with a huge cash deposit. It came out of nowhere. It's just, I had it in my closet for a while. Not knowing we can't use that money to help you buy a home now, because we can't source where that money came from. So that's why it's good as well. Talk about those things with your mortgage loan officer. Make sure the money in your bank account that you think you can use really is funds that we can use.
Right. Wow. Well, lots of things to think about, lots of things to remember. It's obviously a great process. It is stressful, but at the end of the process, you have a house.
You do.
That's probably the best investment that you'll ever make is real estate.
Absolutely.
Not that I'm biased or anything as a realtor, but.
Right. I think we've all learned from what happened in 07, 08, which is great. It's a great time to buy a home right now. The rates are so low, and I know there's going to be more inventory coming up as well. So it's a great time to get pre-qualified. So to your point, Tom, when you find that home you really want, you already have your letter in hand ready to make an offer. So be prepared. I think you and I both would agree, being prepared is key to the home buying process.
Yes. So Margaret, if someone wanted to get a hold of you for more information or to find out more about you and your bank, CCF,
Yep.
how would they get a hold of you?
A couple different ways. You can call the branch directly and we can talk on the phone. The phone number at the Oakdale branch of Citizens Community Federal, or CCF, is 651-578-0509. Or go to my website, ccf.us/M as in Margaret, T as in Tom, O as in Oscar, Z as in zebra, I as in India, E as in Edward, R as in Robert. That'll take you right to my website, or just ccf.us, meet our mortgage loan officers. Click on that and you'll see my mug.
Okay.
But there's some really cool tools that you can look at as well, whether it's purchase or refinance, that you can use right on my website as well. So either one of those, you can contact me from the website or give me a call. I'd love the opportunity to talk with you.
Great, thank you. Well, thanks so much for letting me know about some of these other options and for talking people through some of the questions that I get on a frequent basis from
Sure.
buyers. And we really, again, really appreciate you coming on the show today, and I'm sure we'll talk soon.
Thank you so much. Take care.